Can you all hear me? Can you all hear me clearly?
Yes, we can hear you.
Right. So that is good. Please, before we start,
Nicholas.
I would like we all to mute our mics so that you can be able to hear what I'm saying clearly. And if you are
Yeah,
not
yes.
hearing
So
me,
that's nice.
if you
Okay.
are not hearing me, you can drop a message here for me to know so that I will be able to um know what to do in order to fix the issue. So if you are not hearing me, drop a message. So can you all see my, some people refuse to mute their mics. Please, there should be no noise on the background. If you are not hearing me, you can leave a message for me to know. So let's start. In today's class, let me go to the notes I sent to the group today, which is in today's class, you all know we are in week 3 and week 3, and today we'll be learning fair value. Please, I can still hear someone say, mute your mics. So today, what we'll be doing here, the topic of today is fair value gap. So what I'm going to be doing here, I will also be explaining. Also, you'll be seeing it physically. You'll be seeing. I'm still hearing some noise. I don't understand. Mr. Jackson, please mute your mic. I can't hear you. Your noise is disturbing me.
Sorry, I thought I muted.
That's good. So today being week 3 of our mentorship, and then class 7, we'll be treating a topic which is a fair value gap. So when we say fair value gap are those imbalance. I can still hear some of you. I don't know why you refuse to follow simple instructions. Who is that person? Please let's mute our mic. If you don't hear me, then that is when you should leave a message here for me to know instead of disturbing the class. It's not good. We are supposed to be doing what we are supposed to do now, but you still make me waste time in order to still repeat the same thing, which is not good. You are wasting our time. So today, fair value gap, and I'm sure you guys have already gone through the um, message I sent to the group. I think it was in the afternoon or in the morning. It was in the morning I sent that. So I know you, some of you have already gone through it, and some of you already have little experience on fair value gap, and some don't have. So what we'll be doing today is fair value gap. Let me zoom in so that you can see the charts clearly. And so fair value gap, when we say fair value gaps are those imbalance you find on your chart. Imbalance you find in your chart. When price refuse to fill a particular area because of the volume that, or let me say, too much volume of buyer or sellers in the market. So the gaps each candles leave, they are supposed to be filled in the market. So fair value gaps is an imbalance in price action where buyers or sellers dominate so heavily that the market moves too quickly, leave a gap between candlesticks. So if you look these places, if you look places like this, you can see this is an imbalance. If you see this um, big green candle here, is that this is an imbalance and it is called fair value gap. If you look at other candlestick like this one, after this red candle, there was big move, which is a green candle here. And this one retraces back in order to fill the space between this last candle before this green and this third one here. So that's what normally happens. That's how the market is supposed to move. After the first candle, then second candle, then the third candle should come back to fill the first candle before that big move. So if you see it here, you see the gaps are being filled in the market. After a movement, then another candle drops to fill that space and then it moves back. You can see here, this one was filled, but not that perfectly. There's still a space here. There's still space here. So to spot a fair value gap or imbalance in the
Now
market
share that which can be eaten generally. You know, the general.
is the person speaking. I said we should mute our mics. Someone say you can't hear me very well. Can you hear me now? Can you still hear me?
Yes, sir.
Okay,
Yes, sir.
okay. Okay, that's good. So any imbalance in the market like this is a fair value gap. Look at them, fair value gap. Another one here, another one here. So for you to use fair value gap to trade, this is what you should expect in the market. You see this kind of big movement here. Let me mark it. This was the last candle here before that big move start. This was the last candle here. So let me read this step by step so that I'll be able to follow it for easy understanding so that you'll be able to understand the explanation. And here says in SMC times, it's where price has not traded fairly between buyers and sellers. Market often turns to fill the gaps before continuing in the intended direction. So from this part, you can see the market move aggressively from here to this part up till this place. So what you should expect and what you should put in mind is that when you see a very big candle like this, expect that candle, expect it, put it on your mind that the price will still retrace back in order to fill this gap before going up. It will surely come back. So in the note I said example, in a strong bullish move, the market skips levels where sellers could enter. Those skips zone, which is a fair value gap, these are the skip zone because the market was supposed to move and then come back maybe with the next candle to fill this place, but no, because the buyers was too they were too strong in the market. Let me put it that way. They were too strong for price in order to push back immediately to fill here, then go back. So how to identify them is number one, look for a three candle pattern, which is 1, 2, and 3 here. You can still use this 1, 2, and 3. Please, do you understand? Before I continue, do you understand?
Yes,
Yes,
yes.
sir.
Okay, please. I want you
Yes,
to,
sir.
I want you to put your full focus on what I'm saying. If you focus very well on what I'm saying, then you'll be able to move together with me. Because Fair Valley Gap is
Are
not
you
that
hearing
hard.
me?
You said?
This place that I just explained now, I'm confused in this area.
Which area?
You see how to select the candles, the three candles and
Yes,
thereabouts. I'm really confused in that
that's what I'm
place.
still explaining. I want to know if you understand the one I was explaining before getting to where I am now. So after that, I want to continue with my explanation more on that. Did you get what I was explaining before then? With Stacy, she refused to reply.
Yes?
I said, did you understand what I was explaining before?
Yes,
Oh,
yes.
the question you are asking, I want to still go more on that. So,
Okay.
how to identify them? They say look for three candle pattern, which is um this is where the bullish move started, which was the sign. Because it broke structure from this point, this part here. Let me still mark it. Let me use this in order to make from this part there was break of structure here. You all know what break of structure is at this point. This is a break of structure from this point. Immediately, the candle move aggressively to this part, which is candle 1. This is where the sign started. This part, candle 1, candle 2, which is the then candle 2 says strong displacement candle, which is big body, small wick slash or no wick. So this is the big candle here. Among these 1, 2, 3, this is the biggest candle here. This is a displacement candle because the candle is very, very big. Then number 3 candle, the next candle leaves gap with candle 1, which is number 3 candle. There is gap between this number 3 and this number 1 candle, which is number 1 candle, number 2 candle, number 3 candle. You see number 1 candle, they didn't fill the space in between the number 2 candle, which is number 1 candle, number 2, number 3. So the number 3 is supposed to come back and fill here, but it didn't. So it left this place and keep moving up. So what you should know and what you should put in mind is that the candle will surely come back to fill this place. This week here, it will surely come back to fill it. So let's move on. The gap between the candle first week and candle 3 week fair value gap zone, bullish fair value gap found in an upward move. These are an upward move. Act like a demand zone, correct? So you see everything in forex is just like demand and supply. Demand and supply. So when let me say when there is demand in the market, you see that buyers are stepping in. Demand is just like when people are in want about something. When something is scarce and people need it, then they are in demand. So buyers are waiting at this point. This first candle before this displacement, buyers are waiting here. Buyers are waiting at this point. So let me continue. And which is and also bearish fair value gap found in a down. So I will come back to bearish after the bullish part. So how institution use them? Institution creates displacement move, which is this. Starting from here, bullish candle here, and another one. This one refused to come back to fill the first one. Because if you look at other candles here, they were filled in one way or the other. They are all filled. But some, they don't feel, let me say completely. Like here, this one was able to fill it complete. And this point, if you see here, this part was not filled completely. So for you to spot a perfect one, because it's not any fair value gap you are supposed to enter for your buy or sell. So what I'm showing you now is the perfect fair value gap you can use in trading. So don't spot any gap in the market and then you decide to enter. If that place is not a perfect demand zone, your strategy will fail. And when the strategy fail, you know what will happen, because I don't need to tell you what will happen next. You know the risk. You know what will happen. So let's continue. Institution create displacement move, which is this big candle here. Sharp movement with imbalance. Imbalance is still this one because it didn't feed. To grab liquidity. To grab liquidity. So it creates this kind of movement in order to grab liquidity. To grab liquidity. Because what some people will normally do is that they might use here thinking that immediately the candle gets here to this point, maybe they can decide to draw their this thing here. What is it called? Their line at this point, straight to this part, thinking that if the candle gets here, it will start selling. It will start selling. They might decide to use here as break of structure. This part here. They might decide to use this part, waiting that immediately the market gets here, or immediately the market gets here, at this point it will start selling. What smart money does is that they push the market further in order to grab liquidity here. So price usually come back later to mitigate the fair value gap, fill it, which is to fill it before continuing trend. That is why fair value gap are institutional footprint. So let's go back. Look at this place. After the nonsense it did at this point, what happened? The market decided to come back to fill this place, which is this big gap here. If you notice, the market came back to this point to fill it. So what happened? This was the last high here, which is this place. It came back to fill this point, which is this big candle here. And then it went back to take this high out. It went back to take this high out. So that is how to spot a fair value gap. So I will tell you how to enter when you find your confirmation. What you are supposed to do, I will still show you that, because you are not supposed to just enter randomly like that. No, because you need to like confirm very well. So where did I stop? Wait for, no, it's not this place. Entry, wait for price to return. Yeah, wait for price to return into the fair value gap, partially fill or fill fully or full fill, and look for confirmation and lower time frame. Sometimes it will fill partially. It's not must that it will come to this point to fill it then before you know where to enter. Some can still stop at this point here. Then it will decide to go back. Some can still come back to this point here, like 50% of this candle, then go back. Let me show you where that happened. This place was an example here. It didn't fill it completely. There are many examples here. this place. You can see this place. It was not filled completely, but this is an displacement candle. This place. So what you are supposed to do in order to be safe, to take um safer trades, wait for it to come back in order to fill fully or partially or 50% of the candle still. Then you can take your trade from there, from the smaller time frame. This is 1 day. This is 1 day time frame. So example, in bullish structure, after break of structure, just like I showed you at this point, there was a break of structure. Where was I? This place. The first one I was giving you an example, which is this. The first candle that created before the displacement candle. This was the first candle here before the displacement. Then there was a break of structure here, which is at this point. So this is number one confirmation. Break of structure, number one. Liquidity with bullish structure after break of structure. Then look at it, exactly what I'm even explaining. I didn't even say, let me study this before coming to the class and explain. No, it's something that I already know. I don't need to go back in order to start reading in order to come and teach you. No, it's something that I know already. And it's something I've been doing. Unless maybe I just do research or more or on things I don't know. So it will create a bullish break of structure, which is number one. This break of structure here. The price sweeps liquidity. This place here, let me say this point was sweep of liquidity here at this point. The market might have moved, although we can't see it. You can see that maybe in 1 week or 1 month time frame. But this is liquidity graph with this long wick here is a signal of that. So after this long wick, then what did you see? The candle start dropping down, dropping down, dropping down to come and fill this part, which is the first candle before the displacement. After that, what is the next thing? Tap into a bullish fair value gap. This is it, fair value gap here. Then continue uptrend. What happened? It continued the uptrend, then break this place. This should be the kind of target you should target. And then summary, I said fair value gap shows where the market moves unfairly. So the market was not fair at that point. It's supposed to move, come down. The market is moving in the form of zigzag. Go up, come down, go up. You can never see the market moving straight like just a stick. No. Is the market in between buyers and sellers, demand and supply, demand and supply. So that is how everything works in the chart or in the forex market. It's all about demand and supply. Where there is demand, then you should expect the price to push up. And where there is supply, you should expect the market to drop, which is to sell. So um and price usually return to imbalance. Those areas, they are footprints of institutions and gives us high probability entry zone when combined with structure and liquidity. So this kind of trading is what you combine with what I taught you guys, because we already learned I have 10 minutes left. We learn what is liquidity sweep. We also learn what do we call it? Um Order block. What was the other things? Market structure, candlesticks like doji, and the rest. So let me move to 4 hours time frame. Very fast. 4 hours time frame. you time frame. Let me be fast with this. So when you look at it, this was the one I explained about imbalance. This was in 1 day time frame. So you can see what happened here in the 4 hours time frame. And then this is another one for sell. This is a break of structure here. Break of structure. And there was imbalance here. This was the bearish candle before the displacement candle. So what happened? It went back. I explained and I said it can come back to 50%, or let me say 50% of that candle. You see, it didn't fill completely. And then what did you see here? You can also use this as a doji to enter. So this is how your entry should be. This is how your entry should be at this point. You can enter from this point. This is BTC. You are not supposed to enter BTC for so long because the pair is very volatile. You can see how small your stop loss is. And then you can target this area, which is this point here. This point, you can target this, or you can still decide to target as little as this. Remember, I said you should not be greedy in the market. You should not be greedy. So from this point, you can see the movement of this market is still tapped into your TP. After everything, the market still come back to your TP. Then this is another example for sell. Look at it. Another one. This was the last candle before the displacement candle. Then before the last third candle, which creates imbalance. There was imbalance here. So the market decided to go back in order to fill this place. So you can see this was also liquidity grab at this point. Some people could have entered here, then placed stop loss. Wait, let me show you. Some people could have entered this way. Maybe from this way, like this, before this candle print. So they will decide to enter here. And then look at what happened here. It created this candle to take people out. After that, the market didn't go back in order to take you out. So what you are supposed to do at times, when you spot this kind of candle, you make sure you trade wisely using this. Or you can decide to go to 15-minute time frame. Let me show you 15-minute time frame so that you can still know where to enter in order for your TP to be smaller. So let's use this. This was where is yeah, this was the demand zone here. This place can also be called D. So this is it. So people will decide to do something like this, enter from this point, leave their stop loss like this, not knowing that the market might decide to target that place as liquidity. Look at it. This is 15-minute time frame. The price decided to push up in order to take people out. I showed you the liquidity sweep on 4 hours time frame. So this is how it happened on 15-minute time frame. This place was taken out before the market started dropping to this point, and it still hit the TP before taking you out. So when you are taking fair value gap, you should be, even if you should enter here, let your stop loss be somewhere at this point in order to be at the safer side. Then you see, even if the market decides to go back, it will still drop down without touching your stop loss, which is here. So this is another entry, how to enter fair value gap for sell position. So I've already shown you the one for buy position. I don't know if it can still take me to the buy position on the other candlestick, which is bullish fair value gap. I think this will be the one for the 1 day and 4 hours time frame I showed you earlier. So this is an example of it. This was another one here. Which is this. And this is a break of structure. This is a break of structure because it's having a touch which was supposed to go beyond this. It still dropped another 1, 2, 3, and then there was break of structure. So on 4 hours time frame, we saw that bullish move before the imbalance, before the displacement candle, which was created. So after the break of structure, then this is how to take this kind of trade. This was the displacement candle. To take this kind of trade on 15 minutes time frame, you mark this part, wait for the candle to come back and fill this place, and then this is how your entry should be. This is very simple. This is very simple. I expect everyone, based on this explanation I'm making, you are expected to understand this, because out of everything I have explained, fair value gap should be the simplest one, the way I think, because some of us, I know our brains are not equal. So this is how your target should be. 15-minute time frame will show you where to enter. This was break of structure. This was where a demand zone was created, because if you check clearly here, this was where the price was somehow reacting before moving again with a bullish candle. Then when it came back to fill this part, what did you saw here? Straight to your TP. So with this explanation, I think I am done with fair value gap class. Is there any question? Let me hear from you if there is any question.
Yes, sir. So I have a question.
Okay, be fast.
Based on this explanation you just gave now, this last one,
Yeah.
you said how are we going to know our TP? Based on this explanation now, you didn't show us a pattern where we see.
Where you set your TP. Please, I can't. Where to set your TP? Is that what you said?
Yes, I mean, what position or what are we going to see to know that this is a place where we set our TP?
Okay, but you
Like
understand the one
this
for
part
stop loss.
now, this last one you just said
Yeah, I
about this
understand.
bullish movement.
I understand your question, but did you understand the one for TP?
Yes, yes,
for stop loss,
yes,
So then,
yes,
for you to
yes.
understand
Yeah, I
this,
don't understand the answer.
it's very simple. Let's go back to 4 hours time. 4 hours. Is this thing wasting my time?